What's going on, everyone? So let's talk about some basic taxes and the update for the 2025, and let's go over the what the IRS says that they have provided inflation adjustment for taxes for 2024. So in hindsight, every year they do adjustment for taxes due to inflation, and right now the highlights. What are the IRS providing for tax inflation? Now, I'm going to go over the update and then give you a top 11 tax deduction that you can have. So stay tuned for the end if you want to hear about the tax deduction. But right now, I'm going to go over what the IRS provides for 2024 and the changes they have done. So you won't be surprised. So they have increased the taxable um, income amount. So the standard deduction went from 29,200 and increased to 1,500 for taxes in year 2023. Now, for single taxpayer individual filing separate, the standard deduction raises to 14,600 for 2024 to 750 in 2023. Now, I'll show you a chart a little bit later so y'all can see it, but overall, they did an increase, and the lowest rate right now is 10%, and that's if you make less than 11,600. But this is the new income bracket that the IRS have put out. So for 12% of income over 11,600 to, or if you're married, it's 23,200. Other changes they have done was alternated maximum tax income amount for tax year 2024. So now it's beginning at 85,700 and starts phasing out at 609,000. And if you file married jointly, it's 133,000 and it goes to 1.2 million. And for example, in 2023, the phase out is 81,000 for single, and it went to 57,800. They did increase the child tax credit, which is pretty good. If you have kids, it increased to 7,830. Now, it was 7,430. And for tax 2024, the monthly limit of qualification transport benefit has increased from parking increase to 315, an increase of $15. Now, they have done a estate of descendant who dies during the 2024 have basic exclude amount of 13 million has increased from 12,900,020. So they did increase it throughout the industry or throughout the bracket for everything they taxed. Now let's go over the changes. And if you didn't know, tax brackets, they work a certain way. Now let me explain how tax bracket works, because some people don't understand how tax bracket works. So you are only going to get taxed the amount of money in that certain tax bracket. And what does that mean? If you make $50,000, the first $11,925 is going to be taxed at 10%. But then your money between 11,926 to 4,000 or 48,475 is getting taxed at 12%. And then since you made 50,000, only the $1,000 and 34 $1,534 is going to be taxed in that 22 percentile. So that's how it works. It's not you make 50,000 and all of your income is taxed at 22%. No, each tax bracket you pay your amount and move on to the next one. You pay your amount and you move on to your next one. So that's how the tax bracket works. Now, if you are worried about the standard deduction, I will go over some tips and tricks at the end of this video, so stay tuned to it. But let's go over and visually see the changes. So if you notice right here, if you're married, file jointly, 37% is 73,000, and married file jointly and 37% is 751,000. So they have increased it, and I'm leaving it here so you can see the increase, but it's a pretty good thing. So what will the standard deduction for 2024 tax season be? So if you're filing single, you're gonna be 14,600 for single file, or married who file separately, you're gonna have a plus $750 from the previous year. And if you're all right, now let's talk about what is a tax deduction. Since we went over the IRS a little bit, now you need to review it yourself and get a better understanding. But it's just a basic. We got to increase in our tax bracket, and you get to see it in the previous earlier in this video. So let's talk about what is a tax deduction. So a tax deduction is an amount of money that you get to reduce from your income subjected to taxation, resulting in lower tax bills. Now after you calculate your gross income for the year, you can deduct certain adjustment to your income, such as student loan interest payment, education expenses, self-employment and health insurance payment, certain alimony payments, and contribute to the retirement accounts. So let's go over some of the more popular tax deduction. So the top 10 tax deduction or top 11 tax deduction. The standard deduction is the top one. Number two is the IRA contribution deduction. Number three is the HSA deduction or health saving account. Number four is state and local tax deduction. Number five is medical expense deduction. Number six is a home office deduction. Number seven is a student loan interest deduction. Number eight is mortgage rate interest rate deduction. And number nine is charitable contribution tax deduction. Number 10, education expense deduction. And number 11, it's not really a deduction, it's a tax credit for your children. So you do get a write-off on that, and that's a notable one to talk about. So number one, the popular tax deduction claim on your tax return, the standard deduction. So the standard deduction, if you're married filing jointly, is $29,200. If you're single or married filing separate, is $14,600. If you're filing head of household, is $21,900. Now that's a standard deduction that everyone gets if you file with a W-2, and that is gonna be a great thing for y'all. Now that's in 2024. So for the amount in 2025 that they increased it to, if you're single or married filing separate, it's $15,000 now. If you're married filing jointly, it's $30,000. If you head a household, it's $22,500. Now, most people are just gonna use the standard deduction because if you want to do a non-standardized deduction, you will have to itemize everything and categorize everything. And a lot of people, it is not worth it. So I recommend most people do a standard deduction because most people don't have the itemized list. You only worry about a non-standardized deduction when you start making a lot of money and you have a lot more expenses. So number two, a IRA contribution deduction. So if you are interested in saving in retirement in a tax smart manner, you might want to consider contributing to a traditional individual retirement account or IRA. So it'll lower your taxable income because you are putting it into a 401k or IRA. Now the issue is there is a limit you can put in for a IRA. And the other issue is you just postpone paying taxes now and you plan in retirement to pay for those taxes when you withdraw it then. So it's not you're avoiding taxes, it's you are you're postponing it and you will pay it when you take it out later. So you will have to pay a tax bill. So before you put in money into your IRA you will need to say, hey, okay, I'm gonna pay less taxes in retirement or more taxes in retirement. And that's the question you need to ask before you use number two, a IRA contribution deduction. Now, number three is a health savings account. Now, this is one of my favorite ones to use because I'm allowed to put in a health savings account for my future expenses for or medical bills. So for the amount increase for 2025 for individual is 4,300 and or for married is 8,550 for family. Now if you're above the age of 55, you can put an extra $1,000 a year. So the HSA, the main tax benefit is that you contribute to HSA that are tax deductible and withdrawn aren't subjected to federal income taxes if you use a qualified medical expense. Your contribute may not be deducted for state level income, but number two for is some HSA account allow you to invest your contribute earn interest on your balance, and these earnings are generally tax free if you are using it for medical expenses. Now, when you take a distribution from an HSA account, it has to be medical expenses. And a lot of people will have medical expenses when they get older in age. So I recommend to have an HSA account and have contribute to it because that will help you pay for your insurance, pay for medical, pay for medicine. And it doesn't just have to be your medical expenses. It could be your family, your kids, your grandkids. You can use it on as long as you are using it for medical expenses for your family. Number four, to tax deduction. That's very popular is state and local taxes. So you can deduct a limit of $10,000 of state and local taxes. That's what they maximize on it. So utilize it if you are doing that. Number five is medical expenses deduction. Now, if you're spending considerable amount of money on paying medical expense, it has to exceed more than 7.5% of your taxable income. If not, it is not going to be useful for you. But if you have high expenses for medical, maybe for medical professional prescription treatment, or your medicines, or purchasing exercise equipment, spa, swimming pool, these are tax deduction that you might be able to do, but please talk to a tax professional. Now, number six is a home office deduction. Now, if you're self-employed and you meet certain criteria, you will be able to write your home office. Now, it's very simple. Is you calculate how much square footage you use, and then you deduct it from your mortgage. So if you have 3,000 square foot and you use 500 square foot, well, whatever the correlation cost of that 500 square foot a month, you can write off. Now, you do have to follow the guidelines for it, and it's very strict. So before you do it, talk to a tax professional, because there's some guidelines you want to do before you start doing this. Number 7 is student loan interest rate deduction. Now, everyone that's millennial, Gen Z, boomer, that went to college and have to pay student loans, you have a good news here. You can write off your interest rates. Now, your tax deductions limit interest rate to $2,500. Now, if you're filing single taxes in 2024, however, the full deduction will phase out between 80 to 95,000. If you're married, it'll start phasing out from 165 to 195. Now, number 8 is for the people who can afford a house and you have a mortgage payment. You are allowed to write off your interest rate on your mortgage payment. Now, for the mortgage, you can claim interest rate up to $1 million if you from 2017. You can claim mortgage related for the first 750 mortgage principal as a deduction. Now, you'll receive a 1098, and you really can't do anything until you receive that 1098, and it'll tell you how much you can write off on your taxable income. Now, number 9 is charitable contribution tax deduction. So if you made cash or non-cash payments to a organization, a 501c, or a nonprofit, you are able to deduct charitable contribution. It's now it's not much, but you are able to write it. They do have a ratio for it. So if you deduct cash and non-cash donation, as well as the mileage you did for the volunteer work, so you can write those off if you're doing charitable donations. So your tolls, your mileage, and the cash and non-cash donation, like items. Like this year, I donated tons of tools to a nonprofit to help build houses, and it's roughly about $20,000-$30,000 worth of tools. I donated. Now, number 10 is educator expense deduction. Now, you won't find many teachers who don't purchase items for schools, and they're allowed to write up, deduction for materials they pay for the class to lower down their taxable income. Now, should I itemize my deduction? It depends on how well you are organized. If you're not organized very well, it's not going to go very well. So I tell people do the standard deduction, but those are the top 10 popular tax deduction. Now, the top credit deduction, I believe it's the tax credit for the children. So, hey, I need to mention that, because don't forget to add your kids on your tax form. I really doubt you will, but if you just had a kid this year, you might want to add them on and help lower your taxable income. Those are the changes for the taxes in 2024, 2025, and the top 10 taxable deduction that you can use. Thanks for watching. Like, subscribe to the video.